Now, the United Arab Emirates has announced its exit from OPEC and the broader OPEC Plus alliance. The development is significant for crude oil markets as it marks a shift in global energy politics. The move will be effective starting 1st of May and comes amid heightened volatility in global crude markets. The UAE's departure from the Oil Producers Alliance has added a layer of uncertainty and even weakened the ability of the producer alliances to coordinate supply and prices. Before its exit, the UAE was the third largest producer within OPEC, and this as it pumped around 3.4 million barrels per day and accounted for roughly 10% of the group's output. Its departure further erodes OPEC Plus cohesion, which has already been strained by a sharp drop in production linked to the ongoing conflict. In the near term, the move is even expected to keep price volatility elevated as markets react to both geopolitical risks and shifting supply dynamics. However, over the longer term, the UAE strategy could exert downward pressure on prices. Freed from production quotas, Abu Dhabi's plans to ramp up capacity to 5 million barrels per day by 2027, potentially adding significant new supply to global markets. The exit also reflects a deeper geopolitical and economic recalibration, fragmentation over regional security responses, and a growing emphasis on national economic priorities have pushed the UAE to adopt a more independent energy policy. The move signals a potential reshaping of global oil markets with implications for pricing, supply coordination, as well as the future relevance of traditional producer alliances.
Announcing the collapse of the entire agreement right now is not advantageous, but when the Strait of Hormuz reopens to shipping, that is when everyone may truly reconsider their approach and the agreement could fall apart. This is unfavorable for Russia because it cannot sharply increase production. It would require large investments and a fairly long period of time to raise output by 1 to 1.5 million barrels per day. Countries in the Middle East have such capabilities.
UAE's move comes as Gulf leadership is in Saudi capital Jeddah for an exceptional meeting of the Gulf Cooperation Council to discuss response to Iranian strikes. This is also the first in-person meet of GCC countries since US and Israel launched an attack on Iran 2 months ago.
The United Arab Emirates says it's going to withdraw from the OPEC oil cartel beginning May 1st. This is a big blow for OPEC, which was formed decades earlier as a means to control the prices of crude oil on the international market by setting production targets for its members. Now, OPEC had faced a series of challenges over recent years that includes defections of its members. Qatar, another Gulf Arab nation, withdrew a couple of years ago. It's also faced a real challenge from the United States, which now produces over 13 million barrels of crude oil alone. That's even more than Saudi Arabia, the heavyweight of OPEC within that cartel. Now, there's also been some concerns within OPEC over production, and the UAE was one of those countries that really chafed under those limits. The UAE had plans to raise its production by as many as 4 million barrels a day from its current 3.4, even up to 5 million barrels of oil a day. Now, with this withdrawal, the UAE says it will be able to set its own production levels. It says it will still be a responsible player within the market, but it also comes amid tensions with Saudi Arabia over political differences, particularly in the Yemen war, as well as economic differences, as Riyadh tries to draw some of the foreign direct investment that has long made Dubai a haven for international business.